Welcome to Smart Investing India Hub, where we empower you with the knowledge to navigate the markets confidently. If you're serious about understanding price action and spotting high-probability trading opportunities, you're in the right place. Today, we're diving deep into 4 fundamental core strategies that form the bedrock of technical analysis, especially for supply and demand trading: rally-base rally, drop-base rally, drop-base drop, and rally-base drop. These patterns are like roadmaps that tell us where smart money is accumulating or distributing, and they can significantly sharpen your trading edge. Understanding these concepts will help you identify potential turning points and continuations in price, giving you a clearer picture of market dynamics. Let's break them down one by one. 1. Rally-base rally, RBR. First up, we have the rally-base rally, or RBR pattern. This is a classic continuation pattern that signals an existing uptrend is likely to continue after a brief pause. Let's break down what you're seeing here. Rally 1, the price is initially moving upwards strongly, driven by significant buying pressure. Base, then, we see a period of consolidation. The price trades in a relatively tight range. This base is where smart money is accumulating shares. It forms a strong demand zone, indicating that buyers are ready to step in again. Rally 2, finally, the price breaks out of this base and resumes its upward movement, confirming the continuation of the uptrend. For traders, an RBR pattern suggests looking for long opportunities. If the price re-enters this demand zone in the future, it's often a high probability area for a bounce back up. 2. Drop-base rally, DBR. Next, we have the drop-base rally, or DBR pattern. Unlike RBR, this is a powerful reversal pattern. It signals a potential shift from a downtrend to an uptrend, creating a new demand zone. Let's look at its components. Drop, the price is initially moving downward strongly, indicating bearish sentiment. Base, after the drop, the price consolidates in a tight range. This is where selling pressure weakens, and buyers start to absorb the supply. This base forms a critical demand zone, an area where significant buying interest emerged. Rally, the price then breaks out of this base and starts moving upwards, signaling a strong reversal of the prior downtrend. A DBR pattern is a potential buying opportunity. Traders often look to enter long positions within the base's demand zone, expecting the rally to continue. 3. Drop-base drop, DBD. Moving on, we have the drop-base drop, or DBD pattern. This is another continuation pattern, but this time, it indicates that a downtrend is likely to resume after a brief period of consolidation. Let's break down the DBD. Drop 1, the price is moving downward strongly, clearly indicating selling pressure. Base, then, we see consolidation. The price trades in a relatively tight range. This base is where smart money is distributing shares. It forms a powerful supply zone, indicating that sellers are ready to push prices lower again. Drop 2, finally, the price breaks out of this base and continues its downward movement, confirming the continuation of the downtrend. For traders, a DBD pattern suggests looking for short opportunities. If the price re-enters this supply zone in the future, it's often a high probability area for a continuation of the drop. 4. Rally-base drop, RBD. And finally, we have the rally-base drop, or RBD pattern. This is another key reversal pattern, signaling a potential shift from an uptrend to a downtrend, creating a new supply zone. Let's break down the RBD. Rally, the price is initially moving upwards strongly, indicating buying pressure. Base. After the rally, the price consolidates in a tight range. This is where buying pressure wanes, and sellers start to introduce supply. This base forms a critical supply zone, an area where significant selling interest emerged. Drop, the price then breaks out of this base and starts moving downwards, signaling a strong reversal of the prior uptrend. An RBD pattern is a potential selling opportunity. Traders often look to enter short positions within the base's supply zone, anticipating the drop to continue. Key takeaways and trading tips. Now that you understand these 4 core patterns, here are some crucial tips to apply them effectively in your trading. 1. Supply and demand zones. Remember, these patterns are all about identifying where supply and demand are out of balance. The base is your key, it's either a demand zone, buyers, or a supply zone, sellers. 2. Continuation versus reversal. Clearly distinguish between RBR and DBD as continuation patterns, and DBR and RBD as reversal patterns. This dictates your initial bias. 3. Entry points and stop losses. The edges of these base zones often provide high probability entry points. Always place your stop loss just outside the base to manage your risk effectively. 4. Confirmation is key. Never jump into a trade solely based on the formation of a base. Wait for confirmation. A strong breakout from the base in the expected direction is vital. 5. Timeframes and context. These patterns appear on all timeframes. What's a base on a 5-minute chart could be just noise on a daily chart. Always consider the larger market context and higher timeframes. 6. Volume confirmation. Look for increased volume on the breakout from the base. High volume confirms the conviction behind the move. 7. Don't trade in isolation. These patterns are powerful, but they work best when combined with other technical analysis tools, like moving averages, RSI, or trend lines, to build a confluence of signals. Conclusion and call to action. Mastering rally base rally, drop base drop, and rally base drop will significantly enhance your ability to read price action and spot profitable opportunities. Practice identifying these patterns on your charts, backtest them, and integrate them into your trading strategy. If you found this video helpful, smash that like button, subscribe to Smart Investing India Hub for more insightful content, and hit the bell icon so you don't miss our next video. Thank you for watching, and happy trading!